Okay, good morning, everybody. Good morning. So, I want to make a little bit of analysis to explain further on how I use my price actions for trading or how I use my price action tools for trading effectively. Okay, so right here you can see we are on the daily time frame, sorry, weekly time frame. We're on the weekly time frame, which you can see from here. We're on the weekly time frame. So this is NAS 100. Otherwise, it could also be called NASDAQ. So this is a US 100 companies. How they are performing, whether they are performing well, the prices will rise or the chart will go more higher. But once they are not performing well, the chart is going to be going lower, bearish. So this is what I look for when I come to the chart, using old price action strategy, which still works and is still effective. Depending, if you want to use SMC, you're free. If you want to use price action strategy, you're still free. So I'm on the weekly time frame now. I'm going to select the support and resistances. So these are the support and resistances you can see here, and at the same time you can also see again that price stopped here and price also stopped here. So there's something resisting price at this level 1 and at this level 2. So we are going to post right there. Okay, so this is the weekly time frame. So I go to the daily time frame. I also map out my support and resistances on the daily time frame as well. Let me just look for it. Look here, you can see price resisted here, and also I think price supported here somewhere there. So again, let's look for another one. Okay, let's just take this. You can see price also created a support level there. So that is it for now. Okay, well, I'm still getting another one. This is another resistance. 1, 2, 3. So we are getting a resistance there too. Okay, so we are done with selecting our support and resistances on the weekly and the daily time frame. Now we are going to switch over to the 4-hour time frame. From the 4-hour time frame and the 1-hour time frame, I start to map out my zones. Okay, firstly I map out the higher zones and the lower zones. Okay, the highest high of the zone and the lowest low of the zone. So even if you want, you can still map out the zone from the daily time frame, which is okay. Let's start from the daily time frame to map out the zone. This is the highest height of the zone and this is the lowest low. So what did we get? As you can see now, price already tested here, went up, tested this zone, failed to break there, came down, tested this zone again, failed to break here, then came up, tested this zone again, failed to break this higher zone. So now we are going to go to the 4-hour time frame in order to zoom more into the charts to see what is happening. Now here you can see price tested, give us a double top here. Price gave us a double top, one came down, went here again, tested here, which came down effectively. So this is how to map out zones. Now this is my zone here. Now as you can see, price already broke this zone now below this particular zone here on the 4-hour time frame, gave us another zone. Price created another zone here. So this is how to trade technicals effectively. Once you're trading price action strategy, you don't have to involve any what's this called, you don't have to involve any Fibonacci or any moving average. You don't have to involve all those things. You just have to trade the normal, using the normal to support and resistances, zones, candlestick patterns, and all these things. That's the only thing you have to trade. Just trade what you see on the chart. You don't have to involve any of these signal stuffs like that. No. So that's it. Going over to the, already you see this is the 4-hour zone. Then we are going to go over to the 1-hour zone now. Let's see what is going to show on the 1-hour zone. This is the 1-hour zone. Look at our zone here now. Price gave us this. Price came up here, tested here, came up here, tested here again, and failed to break this level. Then price came, tested this zone, broke this particular zone here. Then it's giving us a resistance here now. See, giving us a resistance here now. Break is already broke here, which gave us a break and retest. Then we are selling off now. Okay, so as you can see, just understand that when trading price action, there is what we call market structure. Okay, so we're using these zones to place the market structure. It goes like a staircase. Once it goes below the initial levels, which is there, look at this zone here. Once it goes below this zone now, It's giving us something like this, and then price just went below the zone, came here. It's going to change. It's already changing the uptrend. It's going for a downtrend, which is a bearish trend now. So this is what just happened here. Look at it. Price kept on giving us initial highs and lows, and then eventually broke. Just let me just complete this staircase so you get it very well. So that is it. That's how price has been doing. Up low, and then it came to break this level here. Price was giving us lows, 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 and then came to break this level, giving us a lower low. Retested, giving us another low. Retested, giving us another low. Retested. So let me just map it out for you so you won't be confused either. Look at it here. So you can see now price already broke this zone. Then again, price can also switch from downtrend to uptrend like this. Sorry, from downtrend switching to uptrend like this. Keeps on going high, keeps on going high. So that is how trend works. There is sideways trend, there is uptrend, and there is downtrend. The uptrend is also called a bullish trend. The downtrend is also called a bearish trend, and then the sideways trend is also called a ranging trend. So depending on whatever way you're trading it, just understand that this structure I just showed you is how you use in identify when the market structure has changed, when the trend has changed. Another name for trend is market structure. Okay, so that is it. You always follow the market structure. The support and resistance lines are just the central bank lines that are set. So when price touches, it resists or it supports it. Once it supports it, you know that okay, this price is forming a particular resistance. From there, you can start to map out your market structure or your trend. So that is it. That's the way it goes. So let me just quickly delete this rough sketch here. So that is it. We are already having another big this thing. You already you can just use this, or you can as well just map out another one here. It's fine. It's all the same. But here you can see that price created for us a support here, and then broke that support, giving us what we call an evening star. So it gave us an evening star. Look at this white doji and then yellow candle. So we are looking forward for this to fall from here all the way to here. So then we take profit. Once we take profit, we look again if price is going to, that's the way we make money. If price is going to really break here, if it breaks here, then you continue to sell. But if it doesn't break here, it forms a bullish candlestick here, you buy. There are so many candlestick patterns you're still going to learn, of which I'll just do it in the next video. But for this video, I'm going to do it for reference sake. um the candlestick pattern you're going to form here, it might be a doji candle, it might be a morning star candle, it could be a shooting star, it could be even a tweezer bottom, anyone, depending on what it shows you. But here, if it breaks and retests the candlestick, it shows you here rejects, it's going to reject, and once it rejects, it's going to form a candlestick. So once you're doing your candlestick analysis, you're going to do inter time frame analysis. Okay, so from 4 hour, 1 hour, and 30 minutes, you're going to make sure you examine the candlesticks that are formed there. So you'll be making a pre-informed decision before you take any trade. So from there now, I'm going to be looking out if price is going to break here, or just retest just from here. It will retest like this and then go up. If it retest like this and go up, we still continue buying. We just follow the market structure. One thing about trading, that's the reason why it's called trading. It's not more of investing. If you treat trading like an investing business, you're going to fail woefully, because you're going to be going one direction, you're going to be thinking one direction. But once it comes to trading, you're going to be thinking double directions. Okay, anything can just happen anytime. Maybe at a particular support level, they tells you a war breaks out and you're expecting gold to rise. Because you're expecting gold to rise, you're only focused on buying that gold, on buying that currency. But it, it's called trading for a reason. At that particular support level, if you're thinking in two directions, that there's a possibility of this market going below and selling more, it might just start buying in the nearest future. So you just have to think in two-way directions. Like, okay, let's say for example now, there's a possibility of it selling and there's a possibility of each buying. You just analyze for these two setups. If it breaks below, you sell. If it's above, you buy. Depending on what you see determines what you're going to do. So you don't just invest into trading like, okay, yeah, you just put money there and say it's going to buy. Nobody owns the market. So that's it for now, guys. I think I'm done with this particular analysis, and you can also do some analysis. Even if you want, you can just put in the comment section any particular currency you want me to analyze. Let's say, let me choose GBP USD. Of course, everybody loves GBP USD and Euro USD. From the weekly time frame, you can see, just again, just use the same principle. It doesn't change. From the weekly time frame, you do your setups, and you put your support and resistances there, making sure it's all touching each line very well. So I think I'm done for. I'm not going to go below because this has already played out. I'm going to focus on this particular one. Let me just draw the particular one I'm focusing on. This is where I'm focusing on, okay? So I don't have to put the support and resistances on this one. I can't put the support and resistances here. It's highly invalid for me. So going over to the daily time frame, let me make sure I've already drawn the support and resistances here. Okay, I think there's remaining one, which is here. Okay, that's it. Then you go over to the daily time frame, you map out support and resistances on the daily time frame as well. Look, we're also seeing more. We're on the daily time frame now. Be watchful of how I switch from time frame to time frame analysis, okay? So you can see there's a resistance here and there's a support here and there's also resistance here. So that's the way I select these support and resistances for future references and trading. I think I'm done here now. Then, okay, you can see, let me just put on the daily time frame, let me select my upper zone and lower zone. Let's see what happened there. Let's just see what happened, what really happened. This is my upper zone and this is my lower zone. As you can see, price already tested on this zone here now. Very easy stuff to do. Like, price already tested on this zone, now it's rejecting. So what are we going to get next now? What is really happening on this chart now? Let's see what is happening. Let's know if we can make money from it. You can see this is our zone. This is our internal zone, okay, and this is our external zone. This all our internal zones now, okay. The reason why I'm saying it is because price did this, look, and then price went up, came down, went up again. Then remember what I told you about change of trend. This is where the trend was changed. It hit here, coming here again, then hit this level. Oh, sorry. Okay, yeah, you can say it hit the same, this equal lows, it hit this equal lows, okay. But before you come, there is also an internal trend. Okay, let's say it hit this equal lows now, but before we came all the way here now, there's an internal trend here that we need to examine. So already from this particular trend, we know that it's already bearish now. From this particular one that I showed you now, from here to here, from here to here, this is a sign of change of trend now. We already know that it's bearish now, okay. So we're going to go inside. So let's know if it's supporting the bearish trend. If it's supporting the bearish trend, we'll continue selling. So let's see, look at the trend here now, the market structure there, okay. This is a market structure there. You can also use Fibonacci. Fibonacci is not it's not in any way an indicator. It's not an indicator, so you can use Fibonacci from the lowest low to the highest high. From the lowest low, lowest high, because this is a bearish trend, from the lowest high, which is here. This is a lower high, this is a lower high, and this is another created another lower high. So we are going to use Fibonacci from this level, put it all the way to this level now, and it's showing us 0.618. So these are the three reversal levels on using Fibonacci. Price can reverse at these three levels: 0.618, 0.5, and 0.318. That is, it's in a continuous trend. If price is giving you lower low, lower highs, lower low, lower highs, okay, look at this now. So what are you expecting is still going to come all the way from here now. Price is still going to come all the way from here to here now. See, so almost guaranteed, but we are not we're going to play it like that because we are, remember what I told you, market psychology, you're going to always base on two-way setups. If it breaks above and retests with a particular candlestick, we buy. If it doesn't, we sell. You don't focus on just only one direction because this is trading for you. So 4 hour time frame 0.618, 0.5, 0.382. So now what are we looking for now? We are looking for, I think, a particular candlestick formation on this level. Now you can see the first one formed a doji, second one formed a hammer, third one formed a hanging man. So these three candlesticks are already showing you that we are going to sell. So you put a sell scale there. Then once you put a sell scale, we're expecting this to come all the way from here now, break, come here, and then sell. Remember, market structure is going to break here and then retest, come like this, then sell. So that's what we are waiting for. But for the meantime, you're not going to just come into conclusions like that. You're going to make sure that the market structure, your take profit level are going to be aligned accurately. Okay, you're not just going to put take profit from that, from this particular level to here. It might not take profit, it might just come back and take you out, or maybe take out the profit you already gotten. So you just put take profit below, few pips below that level, so it will just hit it and then come back. So I think that is it now for now. I already showed you how to use Fibonacci. I showed you how to use support and resistance. I showed you how to also use market structure. The basic thing you should focus on is each and every single day, backtest each and every of this video. You might as well watch this video again and again and then pick the knowledge there. So remember, on the weekly and on the daily time frame, I used support and resistances. I just mapped out my support and resistances. And then on the daily, 4 hour and 1 hour, this is where I map out my what, my zones. On the daily and weekly, I map out my support and resistances. Then I come back again on the daily and 4 hour and 1 hour. I use this particular three time frames to map out my zones. Remember, I'm repeating it for effective learning. Okay, so when I map out my zones, I use it to measure out, like marking out our zones is going to be based on market structure. Remember what I told you, there's this pattern that shows that the market structure or the trend is going to change, which I told you this is it. This is already a progressing trend. Okay, a progressing uptrend. So once price comes down and hits here, like takes out these initial lows, which you can see it never took it out before, and then in first time in history it just comes out and takes out these initial lows. It comes back like this and then continuously goes down. This is a change in trend or a change in market structure, which you should take very note of. This is how your profits are going to come. If you don't take note of this, you're going to like go against the trend and then you become liquidity, which eventually you lose. You might just receive profit for some time and then you blow your account. So guys, take note of it. This is it now. Remember, this is market structure, support and resistances. You learn effectively and you make your money and just get out of the market. That's it, guys. So this is the end of the video. I hopefully you guys learned and took enough value away from this video. Thanks for watching.